You should. Okay, we're live. Hey, Facebook and YouTube live. Steve, I don't know if I told you we're also going to be live on YouTube, so that's
Cool.
very exciting as well.
Yes, it is.
So, hey Facebook, I'm here live today with Stephen Fonlocker. Stephen, let me show Stephen's information. Stephen is the originating branch manager with Cross Country Mortgage, and we're going to be here tonight talking all about myths and facts and pros and cons of down payment assistance programs. So I'm so excited about this topic because I know a lot of first time home buyers and just home buyers in general love to take advantage of a lot of the down payment assistance programs. So we're just going to dive in and go into a lot of them and just talk about the pros, the cons, the myths, the facts. So without further ado, Stephen, could you please introduce yourself? Well, I did give a little bit of
That's
introduction.
okay.
You could give us a little bit of background and tell us about you.
I'm Steve Flounlacker. I've been originating mortgages now for over 18 years. Um, and I'm the originating branch manager for Cross Country Mortgage in Bowie, Maryland. We are a direct lender, meaning we securitize directly to Ginnie Mae, Fannie Mae, and Freddie Mac. We have with COVID, we have added some overlays, mostly geared towards employment because we're getting some vague answers from the agencies. But we have no credit overlays. We don't have any um, reserve requirements. So that means across our board in our agency products, to give you an example, we lend to a 580 credit score on FHA. We lend down to a 580 credit score on USDA. We lend We actually will lend lower than that in USDA if one of the borrowers has a strong credit profile. So if you have two borrowers and one has tougher credit profile, so that's who I am. But if it's okay, I'll dive right into what's out there and what people should be looking at because I think if you don't feel if you're not somebody, and there's a lot of people in the area that fit in this category, if you're not somebody who's in job insecure, if you think that you're going to lose your job, of course, we're not going to tell you go out and buy a house when you think you'll lose your job. But if you're not one of those folks, this is an amazing time to buy a house. Rates are still in the twos for good, well qualified buyers. I closing loans at 2.75% regularly for folks. Okay,
So give us an example since you said that, Stephen. What is a good credit score to be able to get a 2% interest rate? That's amazing.
that's amazing. 660. Okay, 660 and above is going to get you a 2.75% interest rate. That
Wow.
I have never said that before in again 18 years. I haven't told people with a 660 credit score, I'm going to give you a 2.75% zero point interest rate. Yeah, things are pretty remarkable along those lines. And along those lines, when we're talking about down payment assistance, before we jump into that world, um, you our veterans, that's 100% financing. So if you're a veteran, if you're um, and when I say a veteran, that it includes we've got National Guard reservists. If you've got 8 years of reserve or National Guard duty, you're considered a veteran, and from a standpoint of using your entitlement for your VA loan. Okay. USDA we just talked about in our area. This is the funny thing. When I tell someone they're approved for USDA, and then I tell them that there are places in Upper Marlboro that are USDA approved, they don't believe me. Okay,
Wow. So hold on for 1 second, Steve. I hate to interrupt you.
yeah, go ahead.
I have to make sure I have to make an edit really quick because I think I have us oh no, I have us on the right broadcast. I just want to make sure I have us on my main page and not okay, go ahead. Go ahead. Finish.
No, but I
I'm
said
sorry.
USDA is 100%. USDA and VA are not without calling it down payment assistance. Those are the two big 100% financing programs out there. And as I said, I'm sure you as a realtor, when you tell somebody we're going to give you a loan that's called rural development, they're going, wait a second, I'm not looking to live out boondocks. You're like, no, no, Brandywine,
Exactly.
Upper Marlboro, White Plains. These are not areas that are rural. The entire county of Calvert County, the last time I checked, was the entire county is considered rural development. So
That's
these
good
are
to know.
areas
I
where you
didn't
can,
even know that, Stephen.
yeah, yeah.
Okay.
Now with rural development comes the income caps, okay, which can, but $100,000 household income. VA has no income. And did you know VA? We don't have a credit score requirement for VA.
Is that new or is that
Always never had one. VA's
okay?
never had one. We never had one. So
So, do you guys hear that? Anyone that is a veteran and have VA benefits for to be able to purchase a home, there is no credit score requirement. So that is amazing to know. I'm sure it's plenty of vets that are out there. Even for the adults that have adult children that's within, if within the military or just recently left the military and want to be able to utilize their VA benefits and not rent some of these high end apartments, they can actually purchase a home 100% finance and no credit score requirement. Stephen told us here today.
well, no credit score, but I can't. I don't know if you know this about me, but I'm a veteran myself. Okay,
Mhm.
um, you can't. VA doesn't want you to. You can't do harm to the veteran. The idea is to use their veteran. It's a benefit, and if there's any veterans watching this, we have earned our benefits. Okay, but at the same token, if I took somebody who was 60 days behind on their car note right now, and they
Mhm.
were behind on every single bill they had, and said, "Oh, great, this is what you need, some more bills."
Mm.
That's not a benefit to the veteran. Okay, so we have to be able to explain that this is a benefit to the veteran. And let me give you an example. Every one of us has known somebody who got burned by their credit. Okay, they went out, they got themselves overextended, and they got burned. And a
Mhm.
lot of them decide, oh, you know what? I'm not going to extend. I'm not going to open up credit. I'm just going to leave credit alone. So their credit score never recovers. And I get somebody in with with a low credit score, but they
Mhm.
have a good rental reference. Okay, and between the low credit score and the good rental reference, we're able to get them financed, and that happens regularly. That's not something that's uh, anomaly. That's a normal thing that happens in the day to day part of my job. So
Okay. So your
so
job is still to assess their financial situation to make sure that they could afford this mortgage and
right,
be able to pay their bills comfortably, but
correct.
they're not penalized based on some past credit mistakes.
Right. We just want to make sure that they're not in current financial distress because we're not
Okay.
helping them if we're adding to their financial distress. So,
Okay.
but again, no credit score requirement. So we don't. You and I will use some words in here that I know you don't have to come to some. If I look at and evaluate someone's situation, I don't have to try to do a rescore. I can just say, okay, you're ready to go. Give me your rental reference, and we're ready to go. Okay.
Okay, so let me ask you a couple of questions because I do have a couple of questions here.
Mhm.
So I know you just talked about two major down payment assistance programs or just programs
Just
in
programs.
general. Yes. So is it hard to get down payment assistance programs for individuals that's looking to purchase? They have the income, they have the credit, they may not have as much money saved in the bank, and they're looking for an opportunity to get some type of assistance to help them with either down payment or closing costs. Is it hard to get those type of programs?
It's not. It's not, and it's made. And let's start with I'll start off with what there's a program, Maryland Mortgage Program. Okay,
Mhm.
Maryland Mortgage Program is geared towards a higher credit qualified person. Somebody you're talking about there, but their income limits are really high. So you can make a really in our area, their income limits are very high for a family of four. It's very high. It's over $140,000.
Mhm.
Um, if you have really strong credit, I'm talking 720 or higher, they have a program that allows you to extinguish student debt. Okay, so you can
Mhm.
buy a house and you can extinguish student debt at the same time. They'll give you the money to do that. No, they're not difficult to qualify for. I've spent that. I'll give you a little philosophy, and you rarely are on the phone with me when I speak to your customers. Usually, I'm talking to them, and then I'm talking to you. I tell people that I don't mind helping you find a down payment assistance because I think it's going to make you a happier buyer. Okay,
Mhm.
and believe it or not, the referral trail that works through me and works through my realtors makes my life actually pretty easy. Honestly, I spend most of my time working with our realtors and maintaining our relationships and maintaining their customer relationships because we get referrals off the customers who bought houses. Okay,
Mhm.
if the customer buys a house and they have their rainy day fund set up because you're a homeowner, I'm a homeowner. I'm telling you right now, there's joys of home ownership and then there's pains of home ownership. And when something breaks, it's your job to fix it. Okay,
Mhm.
you're the homeowner. Okay, if they've got money left over after settlement to do that, they're going to be happier homeowners. They're not going to be like, "What in the world did he get me into? This is horrible. I have
Exactly.
no money in my pocket. I've got nothing left over, and now I'm dead broke." So even when I'm down, just so you know, when I'm telling them, "Hey, this is a great thing I'm going to do for you," because it's going to take you a few months to find them a house. I keep
Mhm.
telling them, even though you don't need any money, I want you to keep saving because you're going to need. I bang that rainy day fund into their head over and over again because you know I. I own the first house I ever owned. It's not a rental property, and then I own this house. And um, we were heading out on vacation one year, and both air conditioning units went out the same week. Both of them. I couldn't
Wow.
believe it. I'm like, what? We're working on trying to get the one fixed in this house. My tenant calls me. AC doesn't work. I'm like, what? You gotta be kidding me. You know, and you could
Right.
imagine $10,000 later they were both fixed. But that was quite a rainy day fund, and that put a damper on our vacation plans. Well, we did go on vacation, but it's just you need to have money allocated if you're going to be a homeowner. So you got the Cadillac plan, which is CDA, and things roll back from there. CDA covers the entire state of Maryland. Okay, and after that, we offer a program right now that's a 3.5% grant program that dovetails with a FHA loan and just requires a 640 credit score. Okay. Other
Mhm.
than that, it basically there's no additional overlays other than regular FHA lending. DTI, no debt to income ratio restrictions.
Wow.
Yep.
That's amazing.
Yep. And but it's six requires a 640 credit score, and you do have to take home buying counseling. Okay.
Okay.
And then the one that's also nice, and you always hear people, and I know the real estate world hasn't loved it because of the they take a while to process it because once it's finished with the mortgage company processing it, but Prince George's County has a program that goes down to it doesn't have a credit score requirement. Okay,
Mhm.
so since we have a 580 credit score requirement, we can take folks with a 580 credit score and get them $10,000 in down payment assistance. Okay, and they get into a house, they're required to have 1.75% of the purchase price in the transaction. But in this rental market, a lot of these folks are going to require easily that as a deposit on a rental property.
Exactly.
So yeah,
Exactly.
and that goes down to a 580 credit score, and they said that program is it's administered by the Prince George's County, and we are one of their lending partners.
So what are the big hurdles for that program? Because like you said, a lot of realtors don't like to I'm not going to say don't like to, but they know it's somewhat difficult when it comes to getting under contract with some of those programs. So could you give us like what are
Sure.
some of the biggest hurdles when it comes to that program?
Okay, so outside of the first two programs that I talked about, the third program I talked about, the Prince George's County program, requires a second review. Okay, and Prince George's County will not accept a file for their review without 21 days left on the contract. So, and they'll play the game. And if it gets over there, I've told agents, hey, listen, I need you to give me an extension because they're like, no, no. I'm like, well, good luck. I send it to them. They ship it back to me. And they send an email to everybody involved in the transaction that says that there wasn't 21 days on this contract. They'll hold it for a day. And if they don't have that contract extension by the next day, the package is
Wow.
going back in the mail
So
to
they
me.
actually want to see the addendum, the extension, and
Or have
everything.
21 days on the contract already.
Okay. Okay, great. Okay. All right. So I think we kind of went over how does down payment assistance programs work. We talked about the credit score requirements. We talked about the location, the different rather is complete Maryland programs or PG County programs. We kind of went over that a little bit. If you want to add anything extra or additional to how the programs work, feel
Well,
free.
I want to throw one out there that you're doing right now.
Okay,
It's
go ahead.
$100 home.
Yeah.
You know, I mean, I've got with you and another person working in your office. I'll close two of those in the next 15 20 days,
Yeah.
and you're literally taking the person. So HUD takes certain properties and for only owner occupies, and they let them get into the property for $100 down payment.
Mhm.
Pretty remarkable. So
Yeah.
if you pair it up like you did with closing cost, they're getting into these properties for, and then you did the second one, which you paired it with doing a renovation. So these folks are getting into a house and renovating it. So
Completely.
it,
Mhm.
it literally, I if you can find them, that's the best program out there.
That's the only thing about it. When you're looking for the hub, you know, if anyone don't know hub, the hub programs we're talking about, they're HUD owned. So when you say, like, when you see some programs, some properties are bank owned, these properties are HUD owned, and all of their properties are not eligible for the 100 down. However, they let you know up front in the disclosures if that property is eligible for the 100 down. So that means when you're originally putting down that 3.5% in FHA funds, with this program, it's an incentive where you only have to put down $100. So you're just responsible for your closing costs. Now, with my property, it happened to be a 203K, so they only were able to take advantage of that $100 down. However, Stephen, if there's a HUD property and it's not a 203K loan, can it be combined with a program?
Um, so it could be combined with um, the Prince George's County program. It can be
Mm.
combined with that, and it can be combined with the FHA grant program.
Wow. So I mean, I don't want to get into numbers because I know when we start calling numbers, people start thinking, "Oh, wow, I could purchase a house for $1,000." But what I want to just say real quick about programs is everybody's situation is completely different. Like, you might have one of your neighbors or one of your cousins or friends or family members that purchased a home and only had to put down $2,000 versus someone else had to put down $7,000, $8,000. Like, everybody's situation is completely different, and we deal with all of these cases on a case by case basis. Um, Let me ask another quick question, Stephen. So, can you use a down payment assistance program with a conventional loan?
Yes, yeah. The Maryland Mortgage Program allows to combine with conventional financing. And the
Okay.
Maryland Mortgage Program, similar to we were talking about, they offer both grants, and then they offer what's called a silent second. And the down payment assistance basically doesn't have to be repaid unless you refinance the house or sell the house. The grants, where you don't want to pay back anything,
Mm-hmm.
they require a higher interest rate. But yes, they work with both FHA financing and conventional financing.
Okay, that's good to know. Um, can we use more than one down payment assistance program?
Yes, in fact, most of the jurisdictions encourage it. The only thing that it's funny where well, no, it's actually flattering. The Prince George's County reached out to me and asked me for feedback on their program, and I said, well, you guys encourage layering, right? You want to go use the Maryland Mortgage Program with you guys, but then you tell me no matter what, my borrower has to put 1.75% into the transaction, so it doesn't make a lot of sense. So yes, theoretically, the answer is yeah, you can layer these assistance programs, but like, why would you layer an assistance program in Prince George's County that's going to require you to have 1.75% in the deal no matter what? What do
Okay.
you use? Why are you going through the extra hassle and additional qualifying criteria, and it's not going to save you any money to do that. So
So, what are the chances? I'm just asking this because we're talking about this. What are the chances of someone walking away from the table with money? Like, pretty much didn't, I mean, they made money from the deal.
you can't make money. Okay, we can't
Right.
induce you can't induce someone to buy. But
Okay.
I have somebody with the USDA loan right now. Oh, you know this too. You know this family. His name
Okay.
rhymes with cola. He,
Okay.
he's got someone who it's good. He's going to get into the house for like 300 bucks, 500 bucks. Okay.
Wow.
Originally I thought the guy was going to get like your situation and get money back at settlement because he for his deposit, but he's not because Kula told Cola. I won't get over to say the names. He gave me how much. Told me the guy's EMD was different than it really was, but
Okay.
you can. So let's talk about that. So the USDA and the F and the VA financing. I have 3 deals in right now. All 3 deals, the people are going to be getting into the property for less less than one. Two of them will be like about a 0.5% of the purchase
Mhm.
price,
Mhm.
and the other one will be 1% of the purchase price. So
Wow.
yeah, it's crazy. So
Wow.
like,
But see, the thing is, but when you're working with conventional loans, and if you happen to get repair credit, and the repair credit exceeds, I don't know, that's why I'm asking because I have.
well, it's remember that you just cannot have an inducement to buy.
Okay.
Okay, we
Okay.
can't induce. We can't pay you to buy the house.
Okay.
That'd be considered an inducement. Um, the most the so just so you, okay. Now I'm going to get into the weeds a little bit, but I'll
Okay,
help
go
you.
ahead. I'm
This will
sorry.
help.
Look,
This
I
will
didn't
help.
I threw it out there. I threw it out there. So
Yep. Okay. So on a conventional loan, they're going to look at any type of repair escrow you're talking about,
mhm.
and they're going to consider that a remodeling, and they're going to consider it to be part of the 3%. So they couldn't get that money plus the 3% closing out. They would
Okay.
exceed the 3% allowed by conventional financing because that's the way they're going to view it. If
Okay.
they see that in a FHA or a VA, they're going to say, okay, that you need to have the repairs done prior to.
Okay.
Okay, they're not going to allow it. But again, FHA finance is 6% seller help. Okay,
Mhm. Mhm.
6% seller help. If you get 6% seller help and you get one of these grants for 3.5%, you're getting into the house for nothing. You're going to get
Exactly.
nothing. But you know that if someone's willing to give you 6% help, there's probably something up with the house. Okay, it's not the what are the 3 rules of real estate? Location, location, location. And we all know that you want to buy. You're looking to buy an asset,
Mhm.
a depreciating asset, not a
Mhm.
depreciating asset. So getting down payment assistance, but don't going overboard with the idea that the whole idea is to get into the house with no money out of pocket. To me, is that's self defeating because at the end of the day, you want to get into the house with the least money possible out of pocket. Okay,
Mhm.
and that will give you the largest return on your investment,
I
or
agree.
not thereof. You didn't even put an investment in there. I did a loan before COVID. It was my last settlement before COVID, and they got their EMD check back at settlement, so they literally got the house for zero. Okay,
Mhm.
um, and I was talking to this gentleman afterwards, and I said, "You mean where else can you do this? You're buying an asset, and if it appreciates tomorrow, you put no money into it,
Mhm.
and if it goes up 5%, they start doing the math." And he's a well-educated guy, and he's like, "Yeah, this is ridiculous. You're right. This is crazy."
It
You
is
know,
crazy. It is. And Steven, honestly, that's one of the reasons why I enjoy working with you because I realize you do not mind digging into those programs. You don't mind doing whatever is necessary for the clients to be able to, take advantage of the programs. I know some lending institutions have their in-house programs, and you guys probably sure have y'all in-house programs too.
we
But
did.
okay, okay.
Go ahead and shut those down. We did.
Okay. Okay. Well, at some point, I know that, most lenders have in-house programs, but, what I like about you is you listen to the client. You see what's most important for the client's needs, and if they need those down payment assistance programs, or like you said, if it's a way that you can save them some money out of pocket to be able to keep that cushion for that umbrella, that rainy day, because no one want to move into their home house broke. So
Nope, nope.
I think that's an amazing thing, because you get deep into that person's circumstances and help them the best way that you can. So kudos to you, Stephen. I really love that about you, that you would, find those programs and find different ways for our clients to be able to move forward and purchase their house based on their individual circumstances. So I know we're talking about programs and stuff like that. So can we go a little bit into some of the special programs, like for the police officers, the teachers, I know we talked about VA, but some of those different perk program, special programs for individuals
Sure.
that work in certain fields.
Do you know that in certain areas that they call it the neighbors program now. Okay, they
Mhm.
don't they used to call it teacher and firefighter and officer next door, but they just call it the good neighbors program. Do you know HUD still offers houses at half price?
I did not know that.
Yep.
Yeah, you guys see this? I'm learning something today.
So
Half price. So if they have their property listed at $300,000, when you say half price, they the at the good neighbor can get it for 150,000.
correct.
Wow.
Yep. Yep.
See, and guys, this is why we have our lender partners, because we're the real estate agents, and we're professionals in our field with making sure you guys find the right property for your family. But we partner with good lenders that can educate us as well as educate you guys on what's the best course of action to take for you guys. If I was to work with a client that was a teacher, firefighter, police officer, and refer them to Stephen, the first thing Stephen is say, hey, with this program, with this person could take advantage of X, Y, and Z. See if you can find something in that area, and I'm on it. I mean, it's all about developing partnerships, developing having the right resources, trusting that your real estate agent or anyone that is referring you to someone outside services, that they're referring you to somebody that's going to really take care of you. So Stephen, that's good to know. Like, I did not know that with a HUD a HUD property.
Not all of them. Again, they go into certain
Okay.
locations, but they again designated properties are half price for HUD to hold the note on the second. It's a silent second, and it goes away. It's forgiven. Okay, if they live in the,
Mm,
I can't remember the exact amount of years, but they live in the house for a certain amount of years, it's theirs. I mean, so again, going back to talk about guaranteed equity in your property, it's kind of a no brainer. Um,
yes.
and also certain jurisdictions want to give a break to their first responders. So you have to check with title company. And this is kind of something you as a real estate agent have to identify to the title company. Hey, this is our first responder right away, because they get breaks on their transfer and recordation taxes as well.
Okay. Okay. Yeah. So that's good information. Anything else that highlights? I know we talked about the PG County program that will pay for the student loans based on the credit scores. But is there any like, so for an example, I think I heard something about if it's $40,000, if you have it has to be $40,000 and under student loan debt in order for them to wipe that student loan debt out with that purchase.
Yeah. So and this is another one of your friends. I closed one of these loans with him, but it was funny where I heard the same thing. What you just said was I heard this stuff all the time. Oh, but if they got $50,000 in debt and they're only getting 40, what are they gonna do with the next 10? All right.
Mm-hmm.
So I called up the young lady, told her, hey, listen, I said, I can get $40,000 of your debt paid off. She's like, okay. I said, problem is you got to pay off all of it for the program to work. She called me back 20 minutes later, said my grandma's gonna give me 10 grand. Where to go? So,
Wow.
so think about that for a second. I never met grandma, but grandma was a pretty savvy individual, and she realized she could pay off $50,000 in debt for 10 grand. She's like, that's a pretty good deal for my granddaughter. So they went ahead and came up with the 10,000 to extinguish $50,000 in debt. So they went ahead and
Mhm.
got with it. But you do have to. That's the one thing about that program. You have to pay off all debt. You can't say, okay, I'm only going to pay off half my student loan debt, right? It has to be the person that has to that percentage of the purchase price has to cover all of your student loan debt. There can't be any
Wow.
student loan debt left over.
Okay. All right. So that makes sense. Since you're talking about student loan debt, this is a little deeper and it doesn't really have too much to do with programs, but just for the sake of if anyone is watching that has student loan debt, I know that student loan debt is looked at completely different than regular debt when it comes to purchasing a house. For an example, I've known people who had $180,000 worth of student loan debt and wanted to purchase a house. They had the income. They wasn't even make. I think their payments could have been deferred, or they wasn't even making payments at the time. But you guys actually look at that. I mean, talk to me about how you look at student loan debt when you are qualifying a buyer that has student loan debt.
We use 1%, okay, or the actual payment. All right. Um, so if a person has $180,000 in student loan debts that's deferred, we have to count $1,800 against them. Okay,
Monthly.
if they cannot provide us a statement showing what their actual payment is.
Mm,
Okay, um, for okay changes for each program. That's FHA I described to you, and it's also conventional I just described to you.
okay.
If the person is using USDA financing, it's half of that. It'll be $900. It's
Okay.
0.5% for that, and for VA, it's 5% of the deferred loan divided by 12. Okay, is how they
Okay.
calculate. All right.
Okay.
So that's the count. But at the end of the day, all of them will accept. If so, let's say when we do those calculations that the actual payment when it comes out of deferment is going to be less, and we can provide proof of that, we'll
Mm-hmm.
take the fully amortized payment and count that against them versus the 1%.
Okay. So if I mean I know a lot of people take advantage of deferred loans. So if they are taking advantage of that deferred payment, then it could easily be 1% and that 18, just clarifying it a little bit, that 1,800 will be counted against them monthly, which will affect their debt to income ratio, correct?
Yes, very much so. Yes, yes.
Okay.
And it'll you better have gotten your name should be doctor if you've got 180 grand in debt, because other than that you're
Ah,
it, it's going to be difficult for you to purchase a house carrying $1,800 in additional debt.
I agree 100%. So let me ask, does anyone have any questions that's watching? Thank you guys for viewing. Oh, okay, we do have some questions.
Okay.
Um, hey guys, I'm sorry, I'm just getting to see the questions. Okay, great job, Stephen. Shelly said, great job, Stephen. How about first responders? So she just asked about that, and I think we covered that a little bit.
Yep.
Um,
That's
um,
considered a good neighbor. First responders are they used to call it firefighters, officer, but it's just called Good Neighbors now. It's called a Good Neighbor program, and that's where we talk about where you can look at the HUD properties and get one for half price.
Okay, so Crystal want to know, what about if you're working in the medical field? Do they have any discounts for medical workers?
What is nurse?
Crystal, is it a nurse or what type of medical field? And we have another question while Crystal is answering. Can we talk taxes briefly? Okay. Jarrell
Okay.
want to talk about taxes because we know a lot of people want to ask questions and want to know some things about taxes. He says, are tax payment arrangements acceptable?
Yes. Yep.
Okay. So,
So if you are in a if you've already made okay, if you have a debt that's a lien, okay, meaning that the IRS liens you, we're going to require that tax payment plan to have three payments on it.
mhm,
But if you've entered into an agreement with the IRS, just said, okay, they didn't have to sue you to make you do it, okay? As
mhm.
long as you made one payment and we have a copy of that agreement and we show that you've made one payment, you're good to go.
Okay, so you're saying that it's best that if you know that you're in some type of IRS trouble, contact them first, set up
Yep,
a payment arrangement plan,
yep,
so you can have a system together so it will not actually count as a lien. Because if it's a lien, will they have to pay the entire thing off?
No, no, there's
Okay.
still three payments on a lien
Okay.
prior
It
to
just
close.
looks better with them having arrangements versus it being a lien. Is
Yeah,
that
because a lien, we want to make sure you're making the payments. Whereas if you've come to imagine, so if you've already entered into an agreement with the IRS and they didn't have to sue you over it, it's just like any other debt. Okay, you buy a car, you've entered into an agreement to establish a payment plan, right? All we
mm-hmm.
want to make sure of is you've made one payment on the payment plan and you're good to go.
Okay, perfect. So Crystal said yes, a nurse.
Yes, that's considered the good neighbors. Yep.
Okay. So, Crystal, you hear that? As a nurse, that is considered under the Good Neighbors program. So, you can take advantage of all of those perks. They have some awesome perks for the Good Neighbors program. What about educators?
Same. Yep. Good
Oh,
neighbors.
okay. So, what, all right, since we're talking and everybody's throwing careers out there offhand,
All
could
right,
you tell
we'll
us?
do it
Yeah.
like a song.
Okay.
Teacher, firefighter, police officer, EMT, nurse. Um, I'm not sure if they've added to that part. I think that's it. But if you're working first responders and they've been lumped in nursing with first responders and teachers are all considered good neighbors.
Okay. So, we have another question. What about medical debt?
We medical debt we don't consider one way or the other. Don't have to pay
Okay.
off.
Perfect. So you guys hear that? If you have medical debt, and because a lot of people in this, I'm glad they're asking these questions because a lot of people look at their own credit scores and think, I mean, their own credit report and think, oh my God, I have to pay all of this stuff off before I can even attempt to purchase a house. So this is one thing that I always tell all my clients, and I talked about this in the home buyers program. Don't think that you know what needs to be done. It is very important to speak to a lender, speak to a professional, and allow them to actually run your credit. And yes, it will be a hard inquiry. However, it will put you in a good place to make sure that you can get into your home. And believe it or not, you might be ready now. So the thing is, you might look at your credit report and have all of these different things that needs to be paid, or things you want to pay down, or things you feel like you need to do this, that, and the third to. When the lender looks at it, they might say, get a secured credit card and it'll boost your score to X, Y, and Z, and we can work with that. Or pay this credit card down to this percent. I mean, they'll give it to you down to the dollar. Pay this down to this. Pay this account down to that. Pay this account down to that. This will boost your credit score to this, and we'll be able to move forward with you purchasing a house. So it's very important to talk to a professional before you start taking action, expect even with collections and stuff, because sometimes you're waking up things that is kind of non-existent on your credit report when it comes to you being able to purchase a house. And Stephen can go a little further on that.
Yeah, first thing, and I have this conversation a lot. I get the call. I've referred to you by XYZ. Okay, and I'm working on this, I'm working on that, and I always say, please, just do me a favor. I'm going to send you a link. Just apply with me, and I'll tell you what needs to be done. I said, I know you're mean well by it, but you really should just do what you're being told by your lender because we're going to treat again like someone just asked about medical bills. We're not going to hold that against you. So why would you pay that off? I mean,
Mm-hmm.
well, you can pay it off. I mean, if you owe the money, pay the money. I'm not telling you not to do that, but it's not going to preclude you from purchasing a house.
Hmm. And one thing I also just recently learned that um your credit is looked at in different ways by different depending on the type of debt. So
Yep.
you can go and try to get an auto loan and potentially get denied for it, but go and try to get a home loan and get approved for it. So it's looked at different in different types of debt. So I mean, that's why I really strongly recommend that you guys talk to professionals because it really, they're in a place to be able to let you know what they can do to be able to help, to be able to help you to get to the next step. So we got another question. Will a tax payment plan count against the debt to income ratio?
Yes. Yep.
Yes.
It's debt.
Okay.
And so going back to the stuff with your if somebody's on here who's like, you know what, man, I have over X amount of dollars in collections. I can't buy a house. Okay.
Mhm.
What if I told you that 4 months from now you wouldn't have to pay off that money, enter into the payment plan like you would for the taxes, and we just count that as debt, and you can buy a house? You know,
Mhm.
don't have to, paying off, yeah, paying off collections is great if you have the resources to do it, but there's other ways, there's many ways to skin the cat. So again, going back to, just like I said with the IRS, if you have collection accounts and you call them up and say, listen, I cannot pay you, I'm gonna throw $5,000, I can't pay you $5,000, but I'd like to set up a payment plan with you, and I'd like to pay you back over the next 6 years. Okay, and they say,
Mhm.
yeah, we'll do it. You
Mhm.
need to get it in writing, make 3 payments, and we're not going to make you pay off the debt. We're going to then take that payment, and we're going to, you now have credit with them as far as we're concerned, and you're making timely payments.
Perfect. Okay, so Crystal said, "Okay, yes, I know," but she did. So she said, "Can she do that?" She's the nurse. This is the nurse I'm talking about. I guess she wondering, can she do the Good Neighbor program and a first time home buyer? So the first time home buyer has its own different perks, and like Steve, I'm
Yeah.
gonna let Steven go into that. So I guess
Well,
you want to know, could she use the Good Neighbor program along with
yes,
the first time home
yes,
buyer?
yes. Yep, yep. You can absolutely can. Okay. You absolutely can. The
Okay.
only thing that I would tell you on that program is sometimes the properties in the Good Neighbor program require the renovation financing, and the down payment assistance programs do not allow uh, for renovation. They want to move in ready property.
Okay. Perfect. Okay. Wyona, I am going to put Steven's information up really quick so you can see it. And then I'm also going to put his information in the comments after this call so you guys can be able to see Steven's information. Someone asked, how could they get in contact with you, Steven? So you guys see Steven's information there. It has his email address, his telephone number. Steven, can you see it? That all of
I
that
can. So that phone number with
Okay.
see my you guys all see my COVID beard, right? I'm working from home these days. That's my office number.
Okay, so I
I,
can change it really quick.
yeah,
I see I got
put it
access to
put my
change it
cell phone
right
number
now.
in there.
Let me go ahead and change it up. But you can go ahead and tell them your cell phone
Four
number
four one
now.
zero 320 3655. 410 320 3655.
320.
3655. You don't have it memorized, Dinah?
I know, right? I should. I should. I swear. Okay, guys. So there you go. Now that is Steven's cell phone number. Because, like he said, as you know, with COVID-19, everyone has been working remotely, but we're still getting the job done. This is his cell phone number. His email address is up there. His website. I mean, everything. Any information you need to be able to get in contact with Steven is located on the screen, and I'll just keep that up so you guys can write it down if anyone have any extra questions. So Jarrell asked about 203K. He just wanted to know, could you talk briefly about
I'm
203K?
glad someone asked. Okay,
Okay.
I was trying to get in there and say this is, I think it's the best. So it's not a down payment assistance program, but imagine it being a renovation assistance program. Okay, so what we do is we give you the money to buy the house, and we give you the money to cure the house or repair the house in the same loan. Okay, so let's give it. I'm just going to give you an example. So you go out with Ida, and you find your dream house in the dream neighborhood you've always wanted to be in. You want the schools you want for your kids, and the house is $250,000. You open the door, and right away you're like, "Oh God, Ida, look at this place." It's like,
I
yeah,
know.
it's got everything I want. It's in the school district. It's right down the street from my grandmother. Babies, we watch my kids. It's perfect. And Ida says, okay, I'm going to reach out to a contractor. We're going to figure out how much it's going to cost to fix this place. And the contractor comes back and says, this is going to be $50,000 to make this place your dream house. Okay. So you're like, well, I don't have $50,000. How in the world am I going to do that? So we will give you the $250,000 to purchase. We'll take the $50,000, roll it on top of that, and then we will take your 3.5% down payment off $300,000. Okay. So you're getting $50,000 in renovation money. Okay, and we're only taking you're only having to put up 3.5% of that.
And I'm gonna just go a little deeper about it. So, for an example, most 203K properties, you're kind of walking in that property with equity, because if you're in this awesome neighborhood, like Steven said, it's your dream neighborhood. The school district is amazing. The other properties are 9 times out of 10 going for almost $400,000. They probably going for 375, three something, but this one is priced at 250 because of the damages. So when we get it assessed and say, okay, we need $50,000 worth of work, so you're getting a $300,000 loan and walking into the property with what, maybe 50 to 70,000. I'm gonna just say anywhere from 20 to $75,000 worth of equity in that property, and that's what you want to be able to do, honestly.
Investment, right? This is an
Yeah,
investment. More millionaires are made in America in real estate than any other industry. Period. None. Even you've had the tech boom where you've got everybody. The Mark Zuckerberg's a billionaire, right? Well, guess what? There's more millionaires that are in real estate than any other business.
I agree 100%. We have another question. Is the first time home buyer good if you bought a property over 10 years ago in another state?
Do you still if you still own the property? No. If you do not own the property, you're fine. They're looking for lack of home ownership for the last 3 years.
Okay, so if she no longer own a property, then yes, she can take advantage of the first time
If you
home.
have not owned a home in the last 3 years, you're a first time home buyer.
So if she still own a home but in a whole nother state, she cannot
You're
be a
not
first
a first
time home.
time home. Yeah.
Okay. All right. Good. One more question. The questions rolling in, Stephen. We on the road, huh? Okay. Are there certain repairs that do and do not qualify for 203Ks?
Um, yes, luxury items are not allowed for 2 or 3K. I will tell you, like
What is
your
a
current
luxury item?
customers,
Just give me one luxury item. Tell me what could be a luxury item.
pool. Can't put a
That's
pool
a
in.
good one.
I mean, that's pool.
Okay.
So pool, spa, you can't put up, your spa in your house, any kind of stuff. But the only thing that would roll you over, and this is, I hate this when people do this. So there's two different types of 2 or 3Ks. Okay, one is a streamlined 2 or 3K. Ida's working on a streamlined 2 or 3K right now. Okay,
Hmm.
cosmetic work to the property, no big deal, right? The other one is for structural work to the property. Okay, and it's silly to not. And if you do, the one's called a streamlined 2 or 3K, one's called a full 2 or 3K. The full 2 or 3K requires a 2 or 3K consultant. Okay,
Hmm.
and that consultant will go out and do a work write up, and that person's there to protect you, by the way. Okay, so you've got a third party, not the contractor trying to work it out. Not the real estate agent. They're there to protect you. Okay, so all the difference is one requires just a contractor to do a work write up. The other one requires a HUD approved consultant to do a work write up. And for that one, you can do additions to the property. Okay, you can add on square footage. So if you, again, going back to, Ida's been driving you around, you're like, you know what, I love that one house, but I know I'm going to need to. I need a spot for my mom to live on the first floor. You can go in. You can actually put the addition on the back of the house. You can increase the square footage of the property. Okay, you can't do that with the streamline, but that's called a full 2 or 3K.
Okay, that's good information. Okay, so does anyone else have any other questions? I don't want to hold Steve. I mean, even though we love these questions, this is good stuff. We try to stay on for a good 45 minutes. You guys have been amazing. We are so glad that you joined in with us and was able to get some of this good knowledge from Steven. I have Steven's information up here. If anyone want to be able to get in contact with Steven, feel free to do so. You all know me. My name is Ida Robinson, and y'all know that I'm a real estate agent licensed in Maryland and working on my DC license. If I can help you guys in any way, contact me. I would love to be able to be of assistance to you guys. Stephen is one of my lender partners that I work very closely with, and he gets the job done. So that's why we're here talking to you guys, spreading the knowledge, giving you the information, letting you know that it's okay. Another good thing I want to be able to say, it's okay. COVID, although we're going through a lot of things that's going on in the world right now, with the police brutality, COVID-19, everything that's going on, we're still here to be able to help you. We're praying for everybody, all of the families. We want you guys to stay safe, but we also want you guys to know that it we're still here to help you, and this is a great time to purchase if you are looking to be able to purchase. Like Steven said, as long as you have steady income, and meaning steady employment, because those are some of the things that they're looking really heavily at right now, because a lot of people have been laid off. A lot of people have been going through different things when it comes to COVID-19, so they want to make sure that they're investing into something that is going to be, stable. So they're taking little extra measures, but nothing has changed when it comes to your credit score, when it comes to your income. All of that stuff is the same. And there's another thing that I know that they have implemented now with COVID, and I want to put this out there because for some reason, Stephen, I got a feeling that it's not going to go away no time soon when it comes to the reserves. Because with everything that's going on, I noticed that they're asking for you guys to have some sort of reserve in the bank
So
that can
that's
cover.
on, yeah, that's on the renovation, and the
Oh, is that
reason
only
why is
for renovate? Okay,
only for
see.
renovation.
Okay, perfect.
Because you got to remember, you're dealing with there as a lender. We're taking on additional risk there, right?
Mhm.
And the let's say the contractor frauded us up, and there's more work to that property, and she can't move into it for 2 months. Okay,
Mhm.
she thought she'd go move in. All the contractors, I'm going to be working, no problem. You can live here while I'm working. And then comes in, there's no kitchen. Then they're like, we can't live here. It, there's additional people don't think about that. I worked in a place that did just tons of renovation loans,
Mhm.
and it happened all the time where there was like, because again, going back to the thing I told you,
So they
people
find
are scared of the
themselves
full
probably
picture.
having to pay two mortgages or rent
Right,
here, and okay,
right.
got you. Mhm.
So they want to make sure that you're in a position that if something like that happens, that you're not completely destitute. That's
Okay, great. So if it's an average loan, right now, just off the top, I mean, I don't want to like nail you to the cross, but they're not asking for reserves. If
uh,
it's
uh, for people, if you're using gifts,
mm-hmm.
if your down payment is from a gift, then they typically do want to see some reserves. And by the way, so do the down payment assistance programs, because they're not they have the same problems that you said with COVID, where someone goes in and the first month they get into the house, they're like, hey, listen, I want a forbearance agreement. And
Mm,
if you guys have, we don't have any homeowners on
wow,
here,
the
but
first month, I've
yes,
never heard of
yep.
that.
Yep.
Wow.
It's happening all the time now. It's happening a lot. And so lenders are trying to protect themselves from that. So they're
Okay.
looking at loans and trying to figure out, okay, who's a candidate for someone to turn around and claim a forbearance before they even made a payment.
Okay, great. So real quick before we get off, in your experience, what are some of the pros and the cons when it comes? Because I've noticed we didn't even go over that. What are some of the pros and cons when it comes to dealing with the programs?
Pros, well, one, you want to make sure, and whether you're dealing with me or somebody else, you want to make sure the person understands the program you're dealing with, okay? Because you don't want to find out while you're going through the program what the program requirements are. You should have known the program requirements beforehand, okay? So, like again, I'm saying, if you're planning to receive a gift, like we're just talking about, that shouldn't be something spring on someone say, "Wow, you got a gift now. Now you need 3 months reserve or something." You know going into it. Cons, well, that's the cons. The pros, I mean, I said to you, I think that the people, if the getting into a house with the less you can do out of pocket, it's gonna benefit the buyer. They're
Mhm.
gonna be, in a better, stronger position to once they walk into the house to move forward. and not have their rainy day fund already established. So
Hmm. Okay. All right. So thank you, Stephen. Is there anything that you want to add really quickly towards the end of our session? This was amazing. You're always doing an excellent job. We work really well together. Is there anything yes, no, Stephen, Crystal is asking, are you only in Maryland?
Maryland and DC.
Maryland and DC.
I do have people that work for me that are licensed in Virginia as well.
Okay. So what about at your company? Do you have any other counterparts that could potentially work in other states that
Yeah,
um,
we're a 50 state lender. You would apply with me, and I do a referral to a out of state loan officer once the loan's ready to go.
okay. So you hear that, Crystal? If you're not in DC, Maryland, or Maryland, if you're in Virginia or anywhere within the 50 states, you can still work with Steven, submit an application with Steven. He's going to still talk to you, make sure everything is good to go, or, give you his guidance. And then he can do a referral with one of his counterparts in his company, where you'll still be able to, get Steven's what professional guidance.
Expertise, right? Yeah,
Okay, so she says she's in VA.
that's
But yeah,
fine. Yeah, I literally have someone in my office that works for me that is VA licensed.
okay. Yep. So Crystal, you have Steven's information. You can just contact Steven and you guys can make it happen. He's the guy. So yeah, that's it. So as you all know, we do this every Wednesday. I just decided during this COVID-19, I'll probably continue once it's over. That I wanted to interview professionals on Wednesdays just to give you guys some insight, some nuggets. And if you didn't watch the personal finance video from last week, I think that's a good one to watch because she goes deep into breaking down how you look at your debt to income ratio. She goes deep into some credit things. She gave some really good, valuable information. So if you could look down my page and see the personal finance interview, I thought that was really good. Stephen, hey, thanks.
Hey, and that's a plug out there. Not all realtors are the same. So if you guys are looking, you guys are getting some knowledge. But I'm telling you, no one works harder than I do for her client.
Oh, thank you. See, y'all hear that? So, since Steven said that, and I have Steven's information up here, I'll put my information up there. So, if anyone is looking to purchase in the near future and looking for a good realtor that would, like Steven said, take care of you and work hard for you, there's my information. You can give me a call. You can email me and I am here and available and ready to work.
I that sells houses too.
Well, thank you, Steven. So thanks, guys. Thank you so much. You guys are really good. We enjoyed your questions. It's always good to get feedback and questions on interviews like this because we're just talking and we don't know who we talking to. So now we know we was talking to somebody. So all right, Steven, thank you. We can do this again. We can pick some different topics. You already know I'm open to having conversations. So if you want to get back on the schedule, then I'll send you the link to get back on the schedule and we can pick some
Yeah,
different
and
topics.
if everybody liked it, I could even see if I can get it. If we do one, I don't have to check and see if it works into our schedules. Get a 2 or 3K consultant on here too, so people get
Oh,
that.
yeah. That's perfect. Yep, because we can have multiple individuals on here, so that would be perfect. And even if you want to ever talk about some other programs or other you know things that you guys offer in your company, hey, you're more than welcome. I'm here. Okay. All right, guys. So thank
Good night,
you.
everybody.
Good night. Good night.